Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hi, welcome to the June 20th edition of Basis Loaded with Joe Schmit, the summer solstice edition. This is the longest day of the year here in Chicago. Beautiful, sunny and 72 degrees here by the lake. What better way to celebrate than with the latest from the NDPSR report? Let's start this week with butter. This butter number coming in at 311.97 represents a plus 1.5 to the CME 1 week average of 310.40. Now, we traded 10 loads on the CME last week. Butter still able to maintain a normal basis. The manufacturer is selling at a good number at the high end of the recent butter range. However, in order to get that good number, volume suffered. Volume here on the NDPSR falling short of the 1.8 million pound mark, well below our expected 3.5. So after a run of a couple good volume weeks in butter, falling well short here, not even able to surpass the 2 million pound mark, could be a harbinger of the weakness that we saw at the CME. We'll see how things shake out in the weeks to come. Up next is cheese, starting with blocks. This block number at 189.73, also a very nice price relative to the CME 1 week average of 182.31. That's a plus 7.5. So just enormous basis. Part of that may have come from the 17 loads that we traded at the CME last week at a little bit of a higher level. Even with the 17 loads that we traded at the CME, you throw that into the NDPSR volume for this week, and similar to butter, the manufacturer is able to call a very nice price, but again, volume suffering, only able to achieve a little bit over 10.7 million pounds. So well below our expected 12 million pound volume. And of course, this extends the run of disappointing volume in the block as prices have moved north of really the 170 level. Volume has suffered here on the NDPSR. Manufacturers unable to move expected volume at this elevated price level. Story is similar in the barrel NDPSR price coming in at 202.63. And it's interesting, whether you use the 1 week lag, the 2 week lag, or the 2 week average, that benchmark is all 195.50. So with the NDPSR coming in at 202.63, that's just a massive plus 7 basis. So above our expected 4 to 6 cent positive basis, manufacturer able to call a very nice price similar to the block, also similar to the block, lower than expected volume, failing to cross the 13 million pound level, coming in at just a little bit north of 12.8 million pounds. So both categories of cheese higher than expected price on lower than expected volume. In the way, this NDPSR price is 41.86. That represents a plus 1.5 to the CME 1 week average of 40.31. So in this last week in the low 40s at the CME prior to moving to the upper 40s, that 48 neighborhood, it looks like end users sniffed out some value here, and they took that as an opportunity to get a little product around them. Volume on the NDPSR, pretty good, north of 7.2 million pounds and well above our expected 4.5 million. Whey is the only product on this week's NDPSR report where the volume surpasses expectations. Here at 7.2, call it 3 million pounds to 2.5 to 3 million pounds above our expected volume threshold. That 1.5 is a little bit lower basis than we've experienced as of late, and I would expect that basis goes negative in the weeks to come, as the NDPSR has trouble keeping up with the gains that we saw at the Chicago Mercantile Exchange spot market. And then lastly, non-fat 117.50, that represents a plus 1 to the CME 1 week average of 116.63. We traded 26 loads on the CME last week, so big volume at the CME. Here on the NDPSR, just a little bit north of 18 million. So volume struggling to achieve our expected level in non-fat Similar to all the other products, of course, not including whey, manufacturers are selling just a little bit north of 18 million pounds, calling normal basis. All in all, we'll have to call that chalk for the non-fat. So this is week 2 of 4 for the June pricing cycle. Currently getting a June class 3 of 1984 and a June class 4 of 2095. If you carry current CME equivalents out through the 4-week July pricing cycle, currently getting a July class 3 of 1970 and a July class 4 of 2130. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige Driscoll and the entire EverAg Insights team, thanks so much for joining us. We'll see you next week. Bye.